Hello A Plus Trader, here is the module 1 of the price action course. The first module is about price action trading. So in this course, you will learn what is price action trading, the different phases of the market, how you can read price actions. We all see different shapes and sizes of candles on the chart. So you are going to learn how to interpret these price actions. And finally, you will learn how to trade using price action. So let's look at the first lesson. What is price action? So simply, price action is a trading technique that allows a trader to read the market and make subjective trading decisions based on the recent and actual price movement. So in price action trading, you don't really rely on indicators to trade. The main aim is to look at what price have been doing for a certain period of time, then make your trading decisions based on that. You only use indicators as a secondary opinion tool. So price action trading is the study of the actions of buyers and sellers involved in any given market. So after analyzing what the rest of the market participants are doing, it gives you a unique edge in your trading decision. So that is price action. Price action don't need so many indicators. You can just use few indicators to trade price action. So these indicators are just second opinion tools for you. You're just using them to say, okay, to know if you're on track or not. That is all. You are not relying on them to enter the trade or to exit a trade, because if you should rely on them, you may be entering a trade very late and you may be leaving a trade very early too. So tools that are used for price action trading. So since price action trading relates to recent historical data and past price movement, all technical analysis tools like the chart patterns, the trend lines, the candlestick formations, swing highs and lows, and the technical key levels are important. So these are other tools you use for price action trading. In addition, price action trading is systematic trading practice where traders are free to take their own decision within a given scenario based on their behavior and psychological states. We are all different and we all have different views regarding some things in life. So since we are all different and we have different personality, price action allows you to trade based on your personality by just studying the price movements. So here are some advantages of price action trading. Price action trading does not rely on extra software. You don't need to buy any software like some robots for you to know how to trade price action. It is free and it can be accompanied simply by tracking price charts. So by just looking at what price have done recent times, you can trade price action. It is versatile, making it effective for all kinds of financial markets. So the price action strategy cannot just be used on Forex trading. You can also use it on cryptos, you can also use it on equities and the rest of them. So it also remains one of the fastest methodologies because price lag is irrelevant and there is no old data. I believe you understand that price does not lag, price does not lie. Unlike some technical indicators may lie, but price actions can never lie. Most importantly, the traders feel in charge as the strategy allows them to decide on their action instead of blindly following a set of rules. I've discussed this in the previous lesson that price action allows you to trade based on your personality. So if you are someone you don't have enough screen time, you can choose to be a price action trader, but you do more of swing trading, so you can trade based on your personality. Those are the advantages of price action trading. Let's look at the stages of the market. The markets are always changing. It moves from a period of trend to range and also from a period of range to trend. So markets cannot trend forever. The markets cannot be bullish or rally up for a so long period of time. it has to make some swings, make swing lows and swing highs. So within this period, we will see a period of trend, and we also see a period of range. These stages are being broken down into 4. We have the accumulation phase, we have the advancing phase, and also there is the distribution phase and declining phase. So, but first, let's start with the accumulation phase. The accumulation phase usually occurs when prices have fallen over the last 6 months or more. It looks like a long period of consolidation during a downtrend. So from this chart, what you see here, you can see price was moving in a downtrend until it found support within this region here, and after that, this is what we see on the chart. So price may keep moving like this. So if price continue moving like this, it is time to be an accumulation phase. When price is moving in this direction like this, this is an accumulation phase. It is very easy. You can spot this on any time frame to know when price is in accumulation phase. So when price is in accumulation phase, you have to look out for a breakout of that accumulation phase. So, and the breakout is what we call the advancing phase. After price breaks out of the accumulation phase, it goes into the advancing phase, which is the uptrend. Then price start forming a series of higher highs and higher lows. That is what we are seeing on the chart through here. This was the accumulation phase here. You see price moving like this. Then we have the breakout and a retest. So after this breakout we saw here, price retested the breakout zone of the accumulation zone which it broke out. So that is where we saw the retest and a buy signal. When you see a breakout and a retest, this is the best time to take a buy trade. So you can take a buy trade from here, and your stop loss will be at least 50 pips away from that signal candle. Then you join the new trend and you follow the trend higher and higher and higher. So that is the advancing phase. The next one is the distribution phase. The distribution phase is similar to the accumulation phase. This occurs when price has risen over the last 6 months or more. It looks like a long period of consolidation during an uptrend. So from this chart here, you see that price was in an uptrend and found resistance here within this zone and started moving sidewaysly. So this is a distribution phase. So when you see price moving like this at a resistance zone, just know that price have entered a distribution phase, and you look out for price breaking down to the downside. The distribution phase gives birth to the declining phase. That is what I need you to know, that the distribution phase gives birth to the declining phase. So here is the declining phase. So after the long consolidation of the distribution phase like this, you see, this is the distribution phase here. Price broke down and started a declining phase. The best time for you to sell the breakout here, it's from here. When you saw the breakout and retest, you sell. Then your stop loss will be at least 50 pips away from the signal candle while you join the trend down. So you can use, when you understand the phases of the market, the accumulation phase, the advancing phase, the distribution phase, and the declining phase. When you understand these phases of the market, it will give you a concrete knowledge too, to know when exactly when you should be expecting a breakout, and what you should do when you see a breakout, and where exactly you can place your take profit and your stop loss once you see a breakout. Now we have seen different phases of the market. Let's look at how we can how to read price actions, because all we see before now was just the phases. We didn't really pay close attention to what the price chart is saying, the price actions is saying. So this will give you more insight on how to read the price action. So when you are reading price actions, you need to first look out for the slope of the impulsive move getting flatter. You have to look out for the candlestick bodies getting smaller on impulse move. You also have to look out for slope of the corrective moves getting steeper. You need to also look at the candlestick bodies getting larger on corrective moves. But first, let's look out for slope of impulse moves getting flatter. You can see on this chart here, you can see where I put up these black lines like this. See those black lines? Impulse moves get flatter. It's a sign that sellers are losing control in the market and buyers may take over. So here was a downtrend. If you notice that as price was moving down, the candlestick bodies were not straight again. They were moving sideways, that they were flat like this. You see, they are not deep, they are moving flat. They are getting flatter. So when you start seeing a trend getting flatter like this, just know that that is a weak trend. Very soon we may see a reversal. Also on this chart, see how the chart gets flatter until price found support within this region and bounce, and there was a change of trend. This was a change of trend because price broke through this previous swing high here and retested it. So that was a change of trend there. So whenever you see the candlestick bodies on your chart getting flatter, instead of being deep like this, like straight move, instead of being deep like this ones, and it's getting flatter like this, small candlestick bodies. When you are seeing small candlestick bodies, just know that the trend is weak, that there will be a change, a turnaround soon, a change of trend soon. Candlestick bodies getting smaller on impulsive moves. It's similar to what we just said about on the previous lesson. And you see this was a downtrend too. If you should compare the two circles here, this blue one and the red one, you will notice that the candlestick bodies are getting smaller. This means there is lack of momentum. So when you see small candlestick bodies, just know there is no momentum again on that trend. These are big candlestick bodies. You can see the size of candles here. They are big. So this is momentum. You can spot the momentum here. When it started getting smaller like this, there is no momentum again. See these ones? They are just tiny small body candles. So when you start seeing this, just know that there is no momentum again in the market, and start preparing to exit the market or trail your stop loss very tight in case you see a fast turnaround and you don't get lost. So the next one is slope of corrective moves getting steeper. This was an uptrend. You can see here, this was an uptrend here. See price forming series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. As price was moving up, but the pullbacks were getting very steep. You see, the pullback gets steep, like deep, gets steeper and gets steeper. On a nice market that is trending either up and down, if you see that the pullbacks are getting steeper, that suggests that price may reverse soon. And also on this chart, you can see that as price was getting steeper, we saw a breakdown and a change of trend. There was a breakdown here and a change of trend. So as price is moving up and the pullback is getting steeper like this, it's just so straight, like they get very steep, just know that price is going to turn around soon. So this is how you read the price actions on the chart using candlesticks. Let's look at the next one. And this is candlestick bodies getting larger on corrective moves. Apart from that, candlesticks will get steeper. If the candlesticks are steeper and they are also large big body candles, they are large bodies, just know that there is a reversal on the way. So that is how you spot an impulsive move. You use the large body candles to spot an impulsive moves. So when you hear and when you see impulse from here, just know that you are looking for large body candles. So this was an uptrend here, and we start seeing large body candles. See large body candles from here, large body candles, even large body candles from here too. Then price broke down and there was a change of trend. So if the market is trending higher and you are seeing large body candles testing the trend line, just know that very soon price may make a U-turn, there will be a change of trend. It's very easy to read and interpret price actions on the chart. All you need to do is look at the candlestick bodies. If the candlestick bodies are getting flatter, you know something is about to happen soon. If the candlestick bodies are getting bigger, you know something is about to happen soon. If you notice that the candlestick bodies are getting so steep, like very deep and flat, you also know there will be a change of trend soon. So that is how you read and interpret the information printed on the candlesticks. So how to trade price action? Most experienced traders following price action trading keep multiple options for recognizing trading patterns, entries and exits. Having just one strategy for multiple markets may not offer sufficient trading opportunities. Most scenarios involve a two-step process. When trading price action, you need to first identify a scenario like a currency price getting into a bull phase or a bear phase. You may have to identify a range or a breakout. So you need to identify the scenario first. When you identify the scenario, within the scenario you identify trading opportunities. Like once price is in a bull run, it is likely to overshoot or retreat. In conclusion, price action trading is closely assisted by technical analysis tools, but the final trading call is dependent on the individual trader, offering him or her flexibility instead of enforcing a strict set of rules. We have discussed this earlier. So don't just trade based on the size of the candlestick bodies or because the market is in an accumulation phase. Also, you need to also apply some technical tools like the chart patterns, the support and resistance, or you also look at the trend. And in the Pro Trader course, we discuss in-depthly on how you can fine-tune your entries and exits while looking at different market scenarios. So if you want to learn more about how to fine-tune your entries and exits, you have to enroll for the Pro Traders course, and to do that, click the link below this video and you see what is required of you to enroll for the Pro Trader course. So here are a few quizzes for you. This quiz will help you track your progress in the course. So you can answer these questions. The questions are very simple, so just try to answer them. If you learned a thing or two from this tutorial, from this lesson, like the video. But if you don't understand anything on this video and you need more knowledge and more information about a certain lesson, comment on this video. I'll see your comments, then I'll come help you out with more explanations and set example. Thank you for your time.